The biggest IPO in history just dropped, 1.75 trillion valuation, $135 per share, massively oversubscribed right now, currently with over $250 billion in investor demand. Let's do a deep dive into it and see exactly what you are buying. So the IPO share you'll be buying is not just from a rocket company. This financial statement was revised to include XAI Holdings Corporation, which was acquired in February 2026, and X Holdings Corporation, which is Twitter X, acquired by XAI in March 2025. So that's one stock in three companies. So SpaceX is rocket, Starlink, NASA contracts. XAI is Grok, AI compute, massive data center. X, which is Twitter, is 500 million plus subscribers, advertising, subscriptions. When you're buying SPCX at $135 per share, you're buying all three simultaneously. Morningstar analyst says XAI poses a material threat of value destruction to the company with its economic moat indeterminate. Now let's see some of the voting problems. On page 3 of the S1 filing, it's listed that there are two share classes. Class A, what you and me will be buying as retail investors, is 1 vote per share, and Class B, what Musk will be keeping, which is 10 votes per share. So post IPO, Elon Musk will be controlling approximately 82.4% of all voting power through his Class B share. So what does that mean in plain English? You cannot vote out of the board. You cannot block any acquisition, you cannot challenge any executive decision, you cannot influence company direction in any way. SpaceX will operate as a controlled company under NASDAQ rules. Now let's see the valuation math here. Morningstar analyst valued SpaceX at $63 per share, which is a 53% discount to the $135 IPO price. Their calculation is simple. They built three scenarios: bear, base, and moonshot. And even in their most optimistic moonshot scenario, where SpaceX achieves rapidly reusable Starship and successfully commercializes data centers in space, the company is worth $154 per share. Neither of these engineering problems has been solved as of now. These are not guaranteed, might or might not happen in the future. So if you're paying $135 per share right now, it will be a fair price if everything goes perfectly well. So the SpaceX IPO is priced at 62.5x projected 2026 revenue. And to give you a context, Apple trades at 7x revenue, Google trades at 6x revenue, Nvidia at peak AI hype trades at 20x revenue. Now to see the exit liquidity math here. And this is the most important thing you need to understand before getting in on the IPO. I've been holding SpaceX share for years at $10, $20, $50. We're being asked to buy $135 per share. To give you another context on it, SpaceX employees who joined the company when it was tiny or say worth 50 million, now at projected valuation, they're going to turn into millionaires after the IPO, spending the amount of stock they are holding according to their employee tier. Someone in another tier holding another amount of share might even become a billionaire. And this is because all employees of SpaceX, when they join the company, gets equity grants 180 days after the IPO. When insider lockup periods expire, multiple selling windows will open. People who build this company, the early employees, the early investors, sure have been waiting years to sell. And the IPO is their exit and you are their liquidity. That doesn't make it a bad investment necessarily, but you need to understand the dynamics before getting in on it, how trading and investing works. Because the insiders, the employees, the shareholders from early days aren't buying at $135 per share. They're actually selling at this price. So the bull case here is SpaceX is one of the most important companies ever built, controls 60% plus of global orbital launch market. Starlink has 8 million plus subscribers, only private company commercial vehicle to ever dock in the ISS. Falcon 9 has over 600 plus consecutive successful launches so far and only growing. Starship could reduce launch cost to 10x or even 20x when operational. So the bottom line here is analysts and everyone is likely to view the shares as overvalued, and at least in the near future. But the hype is real, the company is real, statistics are real, the mission is real. But the valuation is a bet in the future which hasn't happened yet. To buy now, buy with open mind. If you don't want to buy now, you can wait, there will be other windows. But this is in no way a financial advice from me. And if you don't want to mess what comes next, then subscribe and I'll see you out there in my next video. Bye.